Welcome to a special bulletin on CPI numbers. The numbers have just been released and it has come in at 2.82% versus the estimate of 2.99%. Remember, this is much below the target of 4% which is mandated for MPC. To discuss these numbers in detail, I have a host of a panel. Aditi Nair is joining us along with Indranil Pan and Sovodeep Rakshit. Welcome to this special bulletin. First question to you, Aditi. Is the number surprising for you?
Thank you. Well, the number is a little bit lower than what we were expecting. Our forecast was 3%, and this has come in a little lower because of the food prices having, fallen sharper than what we were penciling in. And I think in terms of the miscellaneous number, it's actually slightly higher than what we had projected. So it's a mix in terms of the underlying fundamentals. But yes, overall, the number has come in softer than expected.
So softer than expectation, the numbers have come in. Let me read out the few details as well. As Aditi was mentioning, food inflation is at 0.99%. Similarly, rural inflation at 2.59%. Urban inflation is at 3.07%, followed by core inflation, which continues to be over 4%, 4.2% this time. And what is your take on core inflation per se, Subodip? This continues to be little above the target?
Well, the core inflation doesn't have a target, but yes, if you're looking at it around the 4% mark, it's certainly on the higher side. And a lot of it is coming from the gold and silver and the jewelry portion of it. If you strip that out, core inflation will be closer to, slightly below the 4% mark. So I think in balance, the core inflation is on the higher side than if you compare it with the food inflation part. And I think there is also a base effect to it. My sense is that core inflation will continue to move up over the next few months. While headline inflation continues to be around sub 4%. So I think that's where we are in terms of the core versus the headline or the food inflation part.
Indranil, I want to come to you for food inflation, which is 0.99% now. Do you think any of the risk to food inflations are currently not there?
Well, it's a very difficult thing to say. If you really read the RBI commentary also, they are watching out for weather-related uncertainties. For the food inflation also, there is a base effect which is dragging it down. Because the last year during this same period, we had seen tomato shocks, etc., etc. Now, what I also read in the newsprint is that because of the early monsoon arrivals, some amount of tomato crops in the southern region may have been spoiled, and for that to take effect and sort of get into the market pricing, it may be around 2 to 3 weeks. So we'll have to watch out for that. As we sit and talk, there is almost a 39% deficiency in terms of monsoon. The point being made is that with the monsoon sort of estimate at normal and 104% of the long period average, if we have to make this up, you still have a chance of temporal and spatial distributions, maybe not according to liking, which can impact the food inflation. But overall said, the risks to or the significant upsides that we have seen in the food inflation in some of the months of the previous year when food inflation had actually crossed the double-digit mark. So that typical risk is not there. From that, we have sort of come down quite significantly. And with buffer storage amounts being larger than the mandated amount, the risks for food inflation suddenly bursting on the higher side may actually be lower. Even Pulse's output has been relatively better compared to previous years.
Aditi,